All right, everybody, welcome. This video today is going to be a little bit different than what I normally do. I really wanted to go over this short pattern that I've been trading for a few months now, more so for my sake, just to go through that whole teaching exercise to make myself understand it better, exactly what I'm looking for, what I'm actually trading, and had some good success with in the past few months here. We're in the middle of the August month now here of 2021, and really this pattern has died off hard. I've not seen any pattern since the start of August. It's funny how the new month rolled over into August and this kind of well just dried up immediately. So I really wanted to just go over this it's exciting to do this pattern because it's really one of the first ones that I felt I found or just I discovered or saw on my own, which is exciting in this space. Usually it's just you learn patterns from other people or what they've seen in the past. But this was kind of exciting, something that I thought I was seeing start of March of 2021 or the end of March 2021, April, May, June, July. This pattern was working out pretty well. It's obviously changed so much since and evolved to specifically what I was seeing since the end of March. But I'm going to try and keep it as brief and concise as I can while also giving as much information and going in as in-depth as I possibly can into it. But let us get going. So essentially for this whole video, I'm going to be going over, first off, what this trade is. We're going to be defining the pre-trade characteristics, essentially what we're scanning for in the pre-market. We're going to be establishing the trade parameters for this specific trade. We're going to be going over the signals for entry that we want to see, signals while you're in the trade, and as well as post-trade, how you can debrief and say, okay, this is what the trade was, how we're going to look at the chart at the end of the trade. And at the end, we're going to go over some actual chart representations from the hotter A-plus setups that this chart pattern actually worked out on, and then also some losers to see, knowing when to cut, knowing when it's going to be a loser, and all those different factors. So let's get into it. All right, so first slide here, what is this trade? And at the basic, most fundamental level, we are shorting the backside of a pre-market news spike. So if you could break down everything into this one specific sentence, that's what we're doing. To open it up a little bit more, we're going to say, to go into specifics, as a press release comes out during pre-market on a slower trading sticker, price action can quickly shoot to the upside with the lack of current and present supply that's willing, and I even mentioned, or even awake during the pre-market hours, to meet all this new buying demand, which is usually algorithms that are just trying to scalp off of a news scanner early in the morning. In addition, any long-term or weekended shorts may be covering in a panic because they're seeing price actions just move so quickly against them, which also artificially forces prices higher. So we're looking to profit off of this divergence or more emotional time for this ticker by going alongside the overhead shares that are now becoming aware of the opportunity to offload shares at an elevated or even break-even price with the benefit of liquidity. So if there's big bag holders that have been just holding on for dear life for this stock, I've never been in that situation, fortunately, myself, of just getting so diamond hands in all these that, oh, it's going to come up eventually, and then you're just bleeding red every single day. We are looking to profit off of those people, forcing the market back down because they realize, okay, this could be my one and only opportunity to get out of this position when I'm actually in the green. So then we'll get into, obviously, way more of this in the next few slides here and in the actual charts. Defining the pre-trade characteristics, what we're scanning for, we want a sketchy NASDAQ company. It doesn't have to be a NASDAQ. It can be a NYSE. It can be an Amex. This strategy I have not really tried for an OTC. This is specifically for listeds as of right now. But NYSEs usually are more legit companies, so I haven't seen a lot of these patterns, really any work on NYSEs. And Amexes trade a little bit differently, so NASDAQs I've always seen to work the best with this strategy. Preferably, we also want American biotechs, for some biotechs in general as well. It doesn't specifically have to be an American biotech, Israeli biotechs, Swiss biotechs. Lots of manipulation going on in those and just sketchy. The news catalysts on all of those are just completely over all of traders' heads, essentially. So it doesn't matter what the news is, in a sense. But biotechnologies are huge, and again, it doesn't have to be. I'll get into the fact, too, of I'm going to list all these different factors and boxes that we want to check for these scans and for the tickers we want to trade, but nothing is ever 100%. Everything in trading is just so by feel and experience, and it is not scientific in any way, shape, or form. So these are just really all guidelines, but just like Jack Sparrow said, it's more of a guidelines, really. Next one we want to look for, medium-sized float. Usually 26 to million is the range that I'm looking for to type of trade these, and pretty much kind of on the higher end. So maybe 40 to 60 million is the type of range that I feel more comfortable that these patterns worked out on in the hotter months of May, June, July. If the float is too high on the ticker, we won't even see them pop up on a scanner if we're scanning for this specific pattern, because the price action won't jump high enough because there's just so much supply ready to soak up that news spike that it really doesn't matter anyway. And if it's too low of a float, they may end up just going so crazy against us, and the price action on those is just so much more unpredictable with the supply that can be thrown around at any given time. Low floats are really scary as a short, so this strategy and my personality in trading is definitely trying to stay away from shorting any low floats. Also looking for overhead on the daily. To break that down even more, we want a downtrending daily chart with bleeding longs. We just want a slow down moving trending chart. Potentially had some nice, spikes back in the day that would have encouraged maybe some people to bag hold this thing, especially at higher prices. But this thing is just it's such a sketchy company that it's just continuing to fall to the price where it belongs, and that's in the gutter. So there's just either bag holders in this that are bleeding long and just suffering every single day, or there's speculators saying they're just chopping in and out hoping for a little spike to sell into. That's the type of people we're looking for to be already in this type of ticker even before the news spike. We want to see the press release released at round number times, and of course not news of a merger or earnings. Earnings trade totally differently, and that's not this strategy at all. And then merger news, of course, it's just going to spike the price to whatever the other company is currently trading at. So those are immediately X's for this type of trade. And then for round number times, we want to see those at round number times, because that means this press release was planned. And having that press release planned means somebody knew that it was going to happen at a specific time. And anytime we can get a little bit extra manipulation potentially from this, or somebody's aware of the fact that, hey, price could start to spike at this specific time, that really helps our case as a short, because then we either have some people on our side to push the stock even higher to bring in more longs, or people already in it knowing the stock is going to spike that are ready and willing to sell to shove this thing back down when it starts to reach a peak in the pre-market. Again, kind of like I mentioned on that third bullet point, we want slow and boring intraday charts in the preceding trading days. If it's been up for a while, that totally nixes this pattern, because there's already attention on it. People have already found it in their scans. This totally nixes what the trade is. And the fact that it's just been slow and boring trading also helps the fact of the bleeding longs that they've always been constantly seeing these doji candles and no volume trading every single day, and then now all of a sudden we get this huge spike, huge volume coming in. It gets the emotions pumping, and that's how we want to trade off of. Also, we need a greater than 10% pure green candles spike following the press release with decent volume. Decent is a loose term, but of course Tim Sykes had put it pretty well that you really want to be less than 10% of its current trading volume. If you're throwing huge share size around on a stock that's only done $10,000 worth of dollar volume in the pre-market, and you're putting in like a $20,000 order, you are going to move that market pretty aggressively, and that's not tradable. You're a market maker at that point. I also will, when we bring up the charts, I will mention reported short interest. That doesn't have really any weight on how I view these, but if the reported short interest is super, super high for some reason, meaning like 75% or above, or over 50%, sometimes that does give me a little bit of caution or trepidation going into these, because maybe why would somebody be revealing that? And sometimes they can actually trade a little bit differently. The reported short interest, of course, isn't always true, and it can be a little bit late sometimes as well. So it's not always the most factual or really what we look for as shorts, but I'll mention it as well too. And it's something to just keep taking note of when you start to trade these more and more. Trade parameters. We are entering this trade at price action's failure to maintain the volume weighted average price, which is VWAP. So in all three of these charts here, you're going to see three of these lines, the gray line being what we're looking for as an entry point, as price action is failing to maintain VWAP from this huge initial spike. The red line will obviously be the stop, which we are risking high of day. And then this green line would be our first cover from entry point at 10%. We need a minimum of 10%, even really to call this a pattern, because anything less is just basically scalping at that point, and that's not really trading. So it's always going to be scaling out of our position size for profit if the trade is working out. Because these things, when they are working well, these things can go, not only can they fall back to their original trading price, which was the previous day's trading close, they can go even further sometimes. So you do not want to stop yourself short, play on words, of covering for profits, but you also do want to make sure that you are taking the money when you can, not when you have to. I'll get into that point a little bit later too, but taking the profits as they are there and not just getting so greedy as a short, because that can be extremely, extremely dangerous and very degenerate. So in order to get into the trade, entry signals that we want to see a reversing VWAP line. So we came up from this huge initial spike after the news catalyst. VWAP is increasing rapidly. As we get to the top of that peak, we want to see that line coming pretty much back down, not hovering at the same point it was, not rising. Especially, we don't want to be shorting into the upside of the move still. We want to make sure that we're playing off of the downside of this spike. We want to see an OTC dip buy-esque speed of the time and sales at a peak of the pre-market spike. So if you've ever traded an OTC dip buy, you obviously know that it's pretty easy to read the tape on those because they're a little bit slower than trying to trade listeds. But essentially on those OTC dip buys, you're getting all these longs, whether it was a huge run up to the upside, and then you're getting this huge drop off of longs having to panic out and trying to get filled in limit orders. They're not getting filled, and that price is just moving so rapidly against them. And longs are just panicking out, trying to get out with huge size. Prices continuing to be pushed lower. When you get to that dip bottom, all of a sudden you go from this area of the bid being smacked consistently to now the bid is beginning to stack a little bit. The prints on the time and sales are looking a little bit more solid. We're getting prints at the same price consistently. We may get a few actually above the best bid, and the winds start to change at that point, and then you get the reversal of the ask now being hit by either dip buyers looking to play off of that or shorts covering at that point, and that gets the reversal. So we're looking pretty much for the exact opposite of that for these pre-market spikes, because they can trade pretty similarly. It's kind of cool to see that if you watch them, the time and sales up close like that in the early morning trading. So kind of what I said as well too, we want to see for our entry point when we're around that VWAP line, which is reversing, we want to see the bid being hit on the time and sales and no buying support coming in on the level 2. Even if we're seeing red prints on the time and sales, it still can be above the best bid. So even though it may be red on the time and sales, that doesn't mean that we're selling or we're panicking at that point. It just may mean for that short little instance, it's just looking weak at the moment. So you want to make sure that there is panicking going on the long side, that sellers are ready to take that liquidity, and if there is any liquidity offered, they are smacking it immediately, and that means the panic is now in, the downside is coming. So while we're in the trade, we want to see price moving quickly away from our entry point. This is a great Mike Bellafiore's SMB Capital quote, kind of for breakouts, more so for after you're defining a new trend, or if you're breaking specific key levels, you want to see that trend being established quickly and immediately for that breakout to really be considered a breakout. If a key level is being developed of $5, say, and then you finally get to that point where you break above $5, but then it's just hovering around 501, 502, dumps back a little bit below $5, and then comes back above 502, 503. That is not a strong breakout. So for this exactly, we want to see, the opposite again. We want to see that VWAP fail to maintain price action, and we want it to just dump quick to the downside to force those longs to panic even more, or we want more shorts to even jump in to see that the price action is going to fall off even harder. We want to see new relative lows being established often, and any key levels being broken through quickly. Again, often is a loose term, and quickly is also a loose term. Pretty much if it's, round number levels of if it's $4 or if it's $7.50, a $0.50 level, or even if for some reason $2.32 begins to develop on the bid, or even you can see it on the chart that, okay, $2.32 is showing some support for some reason. It can do that for a little bit. That doesn't mean that's the end of the trade. But if it begins to hold that for a long time, bounce higher, come back closer to VWAP, that gets you a little bit more ready to exit if things start to look sour because there's support coming in for some reason, and you just always have to be on your toes at that point. Post-trade, first mention here is you're not going to nail this chart perfectly. I do it every single time that when I trade these, I always look back and go, oh, I knew that was the top. I should have got short there. And oh, why did I take my first cover at 10%? I just should have held the whole position to the end of the day and taken that profit for 50%. You can't do that to yourselves because you don't have this hindsight information while you're in the trade. It could have, the probability is always there that it could go against you. So playing it safe is never going to go against you. I can hit or miss with the adage that you're never going to go broke taking profits, but you're also never going to advance as a trader if you cut yourself short so often. But besides the fact, don't hold yourself to this lie of perfection that you should be selling short the tops and covering the bottoms. That's just not going to happen. If you're taking, in this third bullet point here, if you're taking 20% profits consistently, you're an awesomely consistent trader. Those are awesome returns. And I have to tell myself that constantly, even though I look at these charts and think, oh, there was a 50% opportunity here. I could have made all my money. I could have made all this much money, blah, blah, blah. 20% is awesome, especially if it's in a liquid stock and you can say, okay, I'm not really trading huge size right now with my account size, but in the future, that could have been a huge winner. 20% is awesome, and never let anybody tell you different on that. I also included a Sazonov quote here that I love. I mentioned earlier, take the money when you can, not when you have to. Even though it seems like you're just playing it safe and the profits are there, you're beyond 10%, you've already covered once, and it's fizzling out a little bit, maybe putting in some levels on the bid that it's supporting. You're never going to go wrong taking the money when you can, not when you have to. And that not when you have to implies when the stock completely reverses for some black swan reason, completely goes past your entry, breaks your high of day risk, and you still are not out yet for some reason, and then you are just forced physically or emotionally, but physically by your broker saying, yeah, we got a margin call on you, we're going to take your shares away, or for any other reason, when you have to take those shares back, that's just when it gets so sour and so gross. And that's when you look back at the previous in the day and think, oh man, maybe I should have just taken off at this point. But it's all just feel. Nothing is set in stone, and it's all just how you evolve and learn to trade as a trader. Also, I mentioned too, keep this ticker in a database. I've seen plenty of these just rinse and repeat a few times that they don't follow the chart exactly the same way that they did, a few months prior, a few weeks prior. But these same type of tickers can have the same manipulators or same type of actions where they just have a little bit of spike and fall off again. I've got a little sweet spot in my heart for TAOP that I've never nailed perfectly at this point, but the past few weeks in July, it was like 3-4 times that it wasn't a massive peak to the upside. It was only like a 10% move, and that's really not enough meat on the bone for me to get short on that point. But they all fell off to make new lows on the day than the previous trading day close, and they can kind of rinse and repeat. Same tickers can do the same things over again. So just keep those tickers in your mind, keep them fresh, how they like to trade. That's the same thing with all patterns in all trades. Tickers can kind of have a feel, and keep them in your mind and fresh on what they like to do. All right, so here now we're going to get into some charts. I've got 4 different charts as representation. I've got, roughly around like 70 charts in my database now that I've identified and kind of watched that followed similar lines along some of these, but these are more of the A+ setups that I just wanted to share and demonstrate what I'm literally looking for in these and the opportunities they can provide as a short. So this is NLSP, first one on the 15th of July, 2021. Going over the fundamentals, first off, this is a Swiss biotech, had a float of 6 million, which is on the low side, but certainly doesn't scare us out. The news catalyst came out at 8:15 a.m. Eastern Standard Time, where the FDA accepted their application to initiate clinical trials for their drug to treat narcolepsy, blah, 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 blah. Completely over my head. Doesn't matter. The peak of this move in the pre-market here was 52%. Just huge volatility to the upside, and kind of living by the adage of, oh man, it's up too much, so you got to short it. 9 times out of 10, that never fails. But on these ones, especially in the pre-market, when you get the combination of all the factors that we're looking to check off on this trade, that can be huge profit opportunity to the downside. So even just coming in, we're checking off boxes here. Previous trading days, no volume, no volatility, just blah, nothingness. On the daily, you've got a nice little bit of a downtrend here. Not a lot of history for bag holders to still be in this, but certainly we had a big volume day for some reason back here, and it's just a continual downtrend. Potentially a lot of longs looking to get in on this one, maybe buying dips here, hoping for some type of day like this to come out. And you can certainly see with this volume day here, that was an awesome opportunity to liquidate any shares that they could have had, because now they're playing. So we spiked to 4.5 here. Looking at this level, I mean, anybody that's getting a position around here, 4.5 is pretty decent enough to get at that point, especially with liquidity at that price level. So we get the spike immediately, pure green, pretty much right after we see 5:15 here develop. The news press release comes out. We get a spike to the upside. A little bit of a stutter step here, doji, but it still keeps going. That's another thing with this type of trade, that it may come under VWAP, it may touch under, but it's just another feel thing of how they like to work each week, pretty much, of when you want to get short or when you want to deal with it. Because especially too here, as we're finally reaching the peak, puts a top in at 4.5, we're getting indecision on all these candles here. Lots of top wicks, lots of bottom wick. They are red, but they're really not deciding where they want to go at this point. They're just still figuring themselves out, where the bidders stacking up, where are the sellers. And it's at this final point here too, and you can see the VWAP even at this point still rising, but then it's here we get a huge red candle. Not a lot of volume to confirm that, but huge red candle to the downside that obviously breaks that VWAP and puts in the nail in the coffin for the whole rest of the day. Did not even, showed a little bit of strength. This is probably shorts being forced to cover at this point, but still huge distance from VWAP and just dying, bleeding, breaking the previous trading day close by a wide margin all the way to 2.8. This is just an awesome short to be a part of if you can time it well, and especially looking at another thing that'll develop trading this pattern more often is knowing when these are going to break and being very timely and ready to go with your order entries if it does want to end up breaking VWAP. Because at this point here, I can imagine I don't know if I actually traded this one or just kept it on watch, but I can imagine the time and sales was printing off pretty hard as soon as this level was cracked. And there's really no way, unless you had a limit order in to start shorting as it was cracking VWAP here, there's no way you're getting filled when it's moving here, because it starts to move so rapidly at that point. And that's what we want. We want to see the panicking. We want to see the moves to the downside. Awesome representation of this type of pattern in NLSP. The next chart I have here is VVOS from the 7th of July, 2021. Fundamentals, first off, this is an American medical device company in the healthcare sector. Float of 16 million. Again, some of these are a little bit of low floats, but we're looking for that mid-range, 20, 60 million as a good check mark box to go off on these trades. Reported short interest was less than 1%, so really not a factor. News catalyst came out at 8 a.m. It was an independent study, showed that 7% of patients achieved desired outcome, blah, 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 blah. Doesn't even matter. But the fact that this started spiking does matter. Looking at the previous trading days, just blah, no volume, even coming a little bit lower to the downside. Looking at the daily, we got nice overhead. Again, not the most prolific or long history for bag holders to get in, but certainly anywhere around these levels, these big volume days can be huge indicators of bag holders hoping for some type of volatility like it had around, I don't know if this was an IPO or whatever, first day it started listing here at this point, and the downtrending, bleeding longs are just pleading and praying for a day like this with huge volume and huge upside in order to liquidate their shares. So we get a nice spike. You can see press release comes out at this point right here. So really nothing happening. The spike doesn't have to happen immediately. It can lag a little bit as people are still waking up in the pre-market. We get a huge percentage move green spike here. Not the cleanest break of VWAP. Again, this is another one that just emphasizes it's a feel thing, but this red candle certainly was an indication that, whoa, okay, that's pretty big selling coming in at this point. The volume candles are also a good representation of that when sellers come in and watching the time of sales in level 2. Again, another experience point, knowing when to enter. But certainly, as it's under VWAP here, we can see a little bit of a top on the VWAP being put in. This candle fails to break back above VWAP. Another red candle being put in, another harder red candle being put in. And even though it's holding a little bit of base here, you can see it's just continually dying off, dying off, dying off. So this could be a solid entry point with a decent, this is still at like a 10% risk level here on this trade. But the downside was absolutely huge. You're looking, this trade in its entirety has to force you in some lower risk reward situations in regard to having to take on a higher risk. But when this trade is working, man, the hit rate on them is just what's so enticing on all these, that they can just dump awesomely day after day after day on different tickers, of course, not on the same ticker. But that's precisely what we're looking for. And then we're covering 10%. I think if you're getting short $6, you're looking at 5.4. You're covering into strength here at this point and still leaving on some room for the rest of the day. You can see even during market hours, it tries to come back above VWAP, but it fails. And that's just an awesome sign to keep that short on. Even tries a little bit again, can't even get all the way to VWAP, just dumps once more. Awesome cover opportunity in the morning session here if you want to be cheeky, even in the afternoon session here. But got to be careful again, because shorting can be a greedy game very easily, and they can easily get you out, squeeze you just with little movements like this. And that's a total day ruiner when you're having to cover forced at $5 when it was trading at 4.5, 4.4 here, and you should have been covering at that point in the afternoon. But that's just another lesson on that one. Next ticker I wanted to mention, CCXI. This one actually happened the 6th here, the previous trading day from VVOS. So huge spike to the upside. This one was it was 38%, not as big as the other ones, but still very decent compared to the just blah trading it was doing in the previous days. No awesome volume, choppy price action. The daily on this one as well had a big gap down for some reason a long time ago. A little bit of an uptrend here now, but of course still huge amount of bag holders that could or should still be in this if they didn't panic out on this huge gap down day. So they're looking potentially for any amount of strength to see on this type of chart. Coming into this day where they have a news release of coming out at 8:30 a.m. where they filed an amendment for their new drug application to the FDA. Again, whatever. This is an American biotech. It's got a float of 50 million, reported short interest of 8%. So checking a lot of the boxes here. We get a nice pure green move to the upside, and this is one where you can be super cheeky a little bit and say, okay, the tops, you can tell the tops kind of being put in with this huge volume, and this is one that I wouldn't have doubted it to have just a pure and beautiful reverse OTC dip buy time and sales action where it just completely fell off when it got all the orders it wanted, and then it just completely died off. Yes, your VWAP entry point is here when it starts to reverse. You can still see here too a little bit of VWAP is a little bit of a lagging indicator. We're not basing the trade off of if the VWAP just immediately rolls over, but it's a good indicator to say, okay, now the tides have shifted. This is now the backside of the move, and this is a great entry point again. Being ready to have your order in at key levels even before it gets to there at that point, because seeing how big these red candles are, I can imagine just how fast those were moving and how panicky we can get at sometimes, thinking, oh my gosh, I'm missing out, I gotta get short. Just staying safe. Be willing to let it go to the downside if it wants to go more. Be willing to let it go free, because chasing does not get you in any better position, even though this would have worked out awesomely and it can save you a few times. You never want to be entering a trade in a panic. That never sets up the rest of the trade to put you in a good position. That's just a lesson I've learned as well. But entry around here, covering at a nice 15.5. What's the 10% from that? Whatever, like 14. You're covering here at this little base. You can see it kind of double bottoms at this 14.5 area, but then on that third try, it just breaks, continues to jump lower into market hours. A little bit of a curl back right away after the bell, but then just it's dead the whole day. If your entry point is here the whole rest of the day, you're set up nicely for market hours on that one. All right, last one of these A plus setups that I want to mention. I mentioned during a PowerPoint, TAOP. This one has just had my number a little bit. I didn't trade it poorly, but just gotten tricked out a little bit on sometimes. I completely missed, for some reason, I missed this day of when it was doing this move, and I first caught it already when it was failing around here. What a beautiful, beautiful morning dump on this one. Fundamentals on it, it's a Chinese cloud tech company. I forget the float specifically on it. This day, I think it's still 5 million. It's a low floater. But again, just super sketch Chinese company. Their news catalyst came out at 8 a.m. Eastern time, and they had a letter of intent to acquire 51% of another Chinese tech company. News really doesn't matter what it is. It just matters that the market likes it, and it's pushing nice volatility. This was a 55% move from the previous trading day close. Checking a lot of boxes preceding trading days. Not a lot of volume, not a lot of awesome opportunity, which means any longs are just hoping and waiting for seeing some big green, and this certainly was it on this day. Nice downtrending chart on the daily. We've got lots of overhead opportunities here around any of these days. If anybody is still bag holding. Good amount of liquidity, not the most volume producing in this pre-market, and I think that's why that it didn't register on my scanner initially, because it just didn't have a lot of volume. I think my volume scanner was too high at that point to pick this one up until it was around here when it started to bring on a little more volume. But that's why I had to adjust my scanner a little bit, and that's what you're going to have to do at some point. Seeing what trades are working. Does it? Some of these require a little bit less volume to push, and what's just working in that market for that time. But anyway, getting an entry point around here, we just have a pure green candle spike here, pure dump back down. This one's a little bit sharper of a V on the VWAP here, if you can see how that reverses so quickly. Some bottom wicks action here on the red candles, which can be a little tense if you're short at this point, if it's showing that buying support's coming in. But as it comes back above VWAP here on this candle, we get a nice shove back down once again, which is a good sign to see, and continuing to break levels the whole pre-market. It even slows down at this point because longs have really had their fun, and we're just dojing at this point, and still it's continuing to go lower. So you're covering beautifully even in pre-market. And if you wanted to have any shares remaining over, this is, I don't ever recommend it, and I haven't ever done it, but this is just such a sketch company that it's just going to continue to die off day after day after day, that if you hold it overnight, you could more likely than not be fine on this one. So then, like I mentioned on the PowerPoint, these tickers can repeat similar price action day after day. So even on April 15th of 2021 here, same type of thing. Didn't pull up the news catalyst on this day, but we get a pure green spike and a pure red fall off immediately after it. This is 8 a.m. Eastern Standard Time frame. Obviously, that's when the news came out. Huge shove to the upside. This green candle got totally slapped down from the $9 hold level. You can see this red candle is being started to put in. VWAP actually cracks once again. Once under a pretty hard VWAP reversal there. Look at that sharp V point. Getting a short entry around here, 778. You're looking for $7 as an exit. Starts putting in a base here, but then reclaims above, but doesn't break our high of day risk level. That's a pretty far high of day risk level, so obviously you'd have to have a smaller position size in order to risk that much more. But the trend was still in for the day, that this is a sketch company. It's going to break the previous trading day lows, and these things can do this over and over and over and over again. Maybe not to the same extent, maybe not exactly. Of course, these are two totally different charts on the same ticker, but it's just, that's just what it do, baby. All right, so now we're going to get into I'm going to show 4 more charts of when it goes wrong, or when we have to cut at a high of day risk level break, or sometimes it's just not an A+ setup, and knowing the difference between those. So the first one, this is probably one of the better representations of checking off a lot of boxes as the trade is developing, but intra-trade, and of course, as it breaks the high day risk level, things start to go south. So immediately with this green candle spike, this is, just to start off with fundamentals, it's an Israeli biotech, checking out the box. Float of 16 million, a little bit of a lower float, but that's not making us trade the trade. Reported short interest of 1%, doesn't really matter. News catalyst came out at 8:30 on the dot. They announced excellent top-line phase 2 data. This was a 47% peak initially at this point here, which is great room for us to get short at that point to the downside if it wants to still linger around the rest of the day and not come all the way back down to those previous trading day close. The preceding trading days, not doing a lot of volume, not doing anything fun. The daily, we are in an uptrend. So this is one factor that would have put me on edge a little bit on this one, that it has a history of running in the past, and we are on an uptrend a little bit on this one. And of course, you can see the volume on this day too was also pretty big compared to what it's done. So this was a pretty attractive day. Something was cooking underneath the scenes for this day. But looking at this pre-market here and kind of just going line by line, you can see nice green candle spike. We get a red candle that touches back to VWAP. But looking back in hindsight too, VWAP hasn't reversed yet at this point, and price action is still holding well above VWAP. You get a little try underneath that gets bought up, and especially around this $6 whole dollar level, it gets pushed back above there. It really fails to show any signs of strength or panic anybody out, and the more and more these linger around, the worse off it becomes at a short, because that gives more time for this to pop up on other scanners and more other degenerates to get long, or other people to kind of assort themselves and squeeze this thing higher if shorts are trying to jump in at this point. So you get a new high of day try here to 6.6 that doesn't actually break that high of day, which was 6.63, and then it gets sold off. You get pushed back to under VWAP. So as a short, if you're already short from around this level, like the $6 whole level, you're thinking, okay, sweet, rejected high of day, the trade's not over yet. And I just keep going. It's going, oh shoot, okay, it's still putting in levels here at this point. That's not good. It's back above VWAP now. Really failing to break VWAP again, still lingering. And then you get a push back closer to high of day. It's still not breaking. And then finally, it pushes you out at this point. And you can totally get into these trades and think, oh man, well, maybe it just perks a little bit above V or high of day to just get all those stops out, or the algorithms that are, of course, risking the easy level of high of day. Maybe I can just hold on a little bit longer and then it'll just dump back under, which I've thought about doing a few times. You can look good for a few minutes here, and then it's, especially in this minute, okay, we're dumping back under. This could be it. I'm glad I held all those shares, but then it's still a rising VWAP at this point. More volume's coming in. You just get more and more pushes to the upside. And this is why cutting losses when they need to be cut becomes such an important factor, because obviously, especially in shorting, the upside or the downside to your P&L is infinite. It doesn't matter if you have 100% loser, it can go well beyond that. And I've never had that experience, knock on wood, that getting a margin call or just getting a super high percentage loser. But this is a great example chart of, thinking, well, it's not like shooting hard with strength to the upside, but you're even into market open, it's still shooting higher. Market hours, okay, it's a little bit weak, we're breaking VWAP here. Oh, great, finally, that's what we want, and now it's going to dump to the downside. But that's where all the other shorts are getting into, and then you have to go through a halt to the upside and still take more room, more buying coming in to squeeze you out at this point, just till it becomes hair pulling out of your head on this type of chart. Great example on this one of why you want to cut, just even for the sake of mental capital, saving yourself from all the anguish and pain of having to hold through a halt, having to hold through, geez, what is this? Getting short at 6, doing the math, 30%, over 40%. I don't even know what the math is, but I mean, pretty significant position damage to your P&L if you even watch P&L while you're in the trade, which I don't recommend. But great example of that. Next one I wanted to show, ALDX. This one is on the 27th of April, 2021. This is an American biotech. Float of 37 million, reported short interest of 12%. News catalyst came out at 7 a.m. Eastern Time. They had a successful trial of their eye drug therapy, whatever. The peak here was 38% in the pre-market. Nice range for us to trade off of as shorts if it wants to do exactly this type of pattern. So this is one of those that, yes, it could have been a profitable trade, but it wasn't really an A-plus setup. So we get a nice green spike out of the open. Again, checking off boxes that we get really nothingness days beforehand. This ticker we are in the fractionest bit of overhead. It's still on what I would consider an uptrend. If you're looking at this thing even more so on a longer term basis, that we are in an uptrend. It has a history of spiking, can get a little crazy. It's considered a little bit of a low float. It is in that medium float range, but yeah, it can do crazy things. And as we're shorting, we always want to be more cautious than ever. So looking at the trade specifics on it, we get the nice green push to the upside. We get a failure here. Not the most aggressive or hard panicking sell-off. It does actually bounce off of VWAP, but then eventually does fail to maintain that VWAP price. You can see a little bit of a support coming in here as it wants to crack VWAP, but that's our entry point around this like 14.46 at this point. So then 10% from there would be 13 that we're looking for as our first cover at 10%. You just get nice price action that's breaking lows often, continuing to chop off lows. At this point here, we're holding 13.25, which puts in a little bit of base, comes back closer to VWAP, starts hugging that line a little bit more, but then fails that, but then just totally crowds this 13.5 line. So then at this point, I would just potentially, how these types of trades were working out in the week, maybe at this point I would be taking off even more size into profit, thinking, okay, at this point it does have a higher chance that it pulls back to the upside, goes back above VWAP and tests closer to high of day or even shoots above that price level. But you can see we had a shoot underneath that 13.5 and gave you the opportunity to cover at 10% around the $13 hold level for your 10% move there. And then again, you can't get greedy on these because they can just fool around. This was obviously a long trap at some point for how it just completely sank longs here, panic them up, but pull back up again, even to above that range, hold above VWAP, not being able to even touch or come close to it. Test a little bit to fake out the longs again, goes back even up more. It's just total mind games with all these. Great representation and chart to take note of when trying to trade this pattern. SLNO was the next one that I wanted to mention. Just got two more charts that I wanted to go over here quick. This was on June the 2nd of 2021. Fundamentals on this one is an American biotech, float of 42 million, reported short interest of 5%. News catalyst came out at 8 a.m. on the dot. FDA designation for their glycogen storage disease company, blah, 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 whatever. We're looking at a 30% peak here initially from this move here. Decent amount, not awesome, not anything to write home about, but certainly enough room to get 10% at least. It's on these ones too, the hard to find risk levels, I don't know how best to describe it, but especially that when you get all of these just consistently trading tight blocks and they fail to really produce huge volatility in a sense, I think that's the best way to put it. I just really don't like that because I feel like it just takes so much more to get to the upside and there's not too much. The fractionalization of all these dollar amounts is really what I think I'm looking after to get like the sketchy, pulling up ENTX again, just as reference of when they do have the opportunity to go between those fractional shares, you get not leaner price action, but more organic price action, I feel, in a sense, if that makes any amount of sense. But anyway, SLNO, of course, we had those preceding trading days, really did nothing, slow and lacking volume, just completely boring. Daily on this one, pretty nice overhead, huge gap down day, so any bag holders, or if they didn't scare out or lose sense there, they probably could have gotten out here, but huge volume day today means any huge size bag holder would be willing certainly to get out today. Looking at entry points specifically, we get little tease back under VWAP, but then pull back above. Again, that's just experience of knowing if and when these are gonna, if that's the actual crack of VWAP, if that's the official move, or if you gotta wait a bit longer. Move comes to break that high of day, puts in a little bit of a top, then pulls back under, hovers around VWAP for a while, and VWAP still isn't reversing hard. It does point in a little point of a VWAP there, but you could certainly call that an entry around this 122 level here. We get some nice selling to the downside, breaking new relative lows, continuing to put in more volume to the downside. I would be certainly comfortable as a short here if I was short anywhere around this area and it's continuing to break here in the pre-market. We do get a retest of VWAP and then it just begins to hold levels. We get 118 holding. Then we move up closer to VWAP. Now we're holding 122. Then we get test of high a day. We start holding. Again, this is another one where, okay, it just perked barely above high of day. Maybe that was just getting out the stops and now the actual move is going to come in at this point. But I've just seen it time and time again that really isn't the case. And these charts are a great example that cut losers when they need to be cut. Don't play these guessing games. Just save your mental capital. That is more valuable than anything, than any potential profit. Truly it is. Because these things can just totally rip to the upside and just screw you out faster than you can say sarsaparilla. That was a great one on SLNO. Last one, more of a, not so much the biotech angle that we're looking after, but this is a Chinese pet fashion company. So this is just another example of the different types of charts that we can pull these up on, that can hit the scanner, and being aware and ready of all the different needs that can be met on these. So DOGZ, Chinese pet fashion company, float of 18 million, pretty low float. Reported short interest of 2.5%. News catalyst came out at 9:15 a.m. Eastern Standard Time. Costco was now going to feature their dog products in new stores, whatever. I think this company even had just news article after news article posted each and every single day trying to pump this thing that, oh, we're now selling in Whole Foods. Oh, doing the same news press over and over again, but just same shit, different day, obviously. The later these come out, closer to market open, the less intrigued I get by them, because the less time it has to dump hard. And the easier it is for any early shorts like me to get screwed over, because the longs now see this closer to market open with all this more liquidity coming in at market hours, and they can easily shove these things to the upside. So the closer they are to market open, the less I get intrigued on them. Obviously, this one at 9:15, it only had 15 minutes to dump hard or to panic out longs before a lot more volume came in once the bell rung. But you can see we get a nice green spike here, some toppy wick action that did crack VWAP, but then pulled back above again, and then finally did actually fail to maintain it, but did put in some price levels. Just choppy, not the most awesome. It's still breaking lows, so comfortable as a short in a sense, but then just knowing when to cut and risking high of day here, this 2-2 level as it pushes past. You can whine and complain as you get screwed out on this little bit of a doji here candle. Probably just stops getting hit at this point, but still the trend was upward, and especially the rest of the day, the trend was certainly upwards. And again, the mental capital is one of the more valuable things on this trade. Of the bus, it's sitting at the bus station. If you're not going to get filled on this one, if this trade isn't going to work out, just wait 10 minutes and there's going to be one the next day. There's going to be one the next morning on all these. So that was the pattern. That was the morning dump trade that probably is more commonly known as a gap and crab, but I feel mine has got a little bit more of a nuance to it on what I look for. Just immediate price action dump that I really want to be right immediately all the way and really want to be done with the trade by market open in a sense on these. So that was it. I can thank you guys for watching. I hope I covered it pretty well. I think I covered all the bases on every aspect of it. I've traded this type of pattern, I think, just shy of like 40-50 times in these, was that 4 or 5 months now, from March to August. So not all of them were awesome, or not all, especially in the early months. I really didn't know what I was trading. I thought I knew what I was trading, but it's become more nuanced and refined of what I was specifically trading. But that was it. I was excited to share it, excited more so to teach it and go through the process of explaining it so I understood it better, and I'd love to do this more in the future. So I thank you guys for watching, and I will catch you guys on the next one.